Hello, welcome at another How to DAO live stream. Today, we have Matt Zimmermann from Parabolic. Matt started his career similar to mine in financial services. He was working at JP Morgan, then at the competitor to the company I work at, PwC, because I was part of EY, and we definitely compete a lot, especially for the resources. And then he went into crypto, and now he's working with Parabolic. But he didn't go far from the financial services because Parabolic it's the infrastructure provider that will be powering the next generation of the fintech. And that's also something I would like to ask here, Matt, on this podcast, like how he sees the future of fintech and how they can use, stablecoin and other crypto infrastructure. And is this really the moment where, the blockchain taking off? So, Matt, welcome.
Yeah, thanks so much for having me, Kumkar. And thanks for the intro. I spent 8 years in fintech and then pivoted to crypto. And when I made that transition, it felt like really two different worlds. Fintech was building on legacy financial services rails, using debit, credit, ACH, wire, Swift to move money, and the crypto or blockchain forward teams we're building new infrastructure, neobanks on crypto rails. Now, fast forward almost 6 years later, I think these two worlds are really colliding and coming back together, where fintech is now looking at crypto as another tool that they can use in addition to all of the other payment rails that they already integrate with for a variety of use cases that we can certainly get into.
Yeah, yeah, definitely. Like, I feel like this is really the time where fintechs are like exploring the new ways. And, Jeremy, the CEO and founder of Circle, also talked about it 2 weeks ago. Was like, the fintechs of the next generation and the ones which are actually will be succeeding are the fintechs which are not existing right now. They are like, they will be built on chain, they will be native to blockchain. And it's a great to hear. I get it. Like he's a stablecoin provider, like he wants everything to be on chain, but really being bullish of like companies and enterprises and fintechs basically being native. It's a very bullish statement. So let's get into the why first. Like why actually fintechs are exploring this blockchain space. Like as you said, they are already using ACH, and there is like fast payments from like Venmo and Zelle and stuff like that. So what is the advantage or why they are really want to be on chain native?
I think that there are three, maybe four reasons, and we can start with. I think the use case where blockchain has really found the most product market fit to date is speculation. And fintechs want to be able to offer users access to financial products that they want to use. And to date, many consumers still think of crypto as a speculative asset. And fintechs want to enable that. We've seen this even over the last several years with uh, PayPal starting to offer crypto in Venmo, and Robinhood started with offering crypto trading, and now they're expanding even further. So I think the first use case is speculation, and then on the opposite side is hedging. In here in the U.S., we take advantage of easy access to digital dollars all the time, and feel like dollars are easy to access and instant to send with Venmo and Cash App and Zelle. And other types of apps like this, but in most of the world, access to stablecoins is a really huge advantage that they've never had before. You can't go to your bank in many places in South America or in Africa or in Southeast Asia and get access to U.S. dollars. So really, especially in emerging countries, access to dollars is a huge advantage, and this is where we've seen the crypto native fintechs really start to gain some traction with stablecoin first banking. Para is supporting many Web3 native teams building these new neo banking infrastructure. on crypto rails. We see a lot of this in the Celo ecosystem and the Solana ecosystem and a variety of other EVM chains that we support. Um, and then just payments, getting access to instantly send money 24/7 is a huge advantage that banks don't and fintechs don't have access to on traditional financial rails. Even with credit cards being available on nights and weekends, oftentimes the settlement for those transactions waits until Monday, which creates a lot of operational overhead and additional costs for fintechs that they can take down and really eliminate by taking advantage of stablecoin rails, even if it's for something like nights settlements on nights and weekends and not taking over the entire settlement process for their entire operation.
That's interesting, and maybe like let's touch up on the last one, because like that's something what also the founder of Robinhood was saying, like why they actually launching their own chain now. They are on Arbitrum, but like they want to build their own chain in the Arbitrum ecosystem eventually. It's that 24/7. Like he's like, there is so much activity happening over the weekend and then like during the nights, and then we cannot really settle it till Monday or till the next business days, basically. So what crypto it's opening up, it's this new like real-time settlement, basically. And at the same time, some of the exchanges, like the London Stock Exchange, is looking into the same. Like they want to actually the stocks to be traded 24/7, and like that will be their advantage over like New York Stock Exchange. So what do you think, like what's the like market size for this? Like have you like explored like what's really the value proposition? Because I get it, there is some overhead, but are we talking like billions of dollars, or like are we talking like there is a lot of fraud happening, or why they want this real-time settlement actually be happening? Because from user perspective, the real-time settlement kind of happens, but on the back end it doesn't. So what's the value proposition for those companies to actually be on the real-time settlement rails?
Uh, It's a great question. In many cases, it comes down to operational overhead and companies needing to keep a lot of capital on their balance sheet in order to be able to float the night and weekend settlement process. One example that I can share, I was recently talking to a card issuing platform that sits between the Visa and MasterCard, the issuing banks, and the card holder. Um, and their customers every weekend need to post 3 times the daily average spend in order to cover the float over the weekend. And now this capital is really just kind of sitting idle during the week, and they need to constantly like refill it, which creates a lot of overhead in terms of operational complexity and sending money, making sure that the money gets there in time. Um, and when you have a 3 to 5 day process using ACH, this can create a lot of uncertainty in this cash flow process, and having the certainty of instant settlement on blockchain can really reduce a lot of that overhead and complexity in the process for settling transactions. In terms of the size, we're talking billions of transactions and trillions of dollars. We've already seen stable coins start to reach and surpass the volume of like Visa and MasterCard, which are the global leaders in payments. Um, and I think rather than expecting that we'll see Visa and MasterCard lose their volume, I think that we'll soon see Visa and MasterCard transitioning much of this volume to stable coins, where it'll be very much additive to the overall crypto market and the volume that's being processed on chain, where we see these fintechs taking advantage of crypto alongside the more crypto native institutions that are increasing volume at the same time.
Yeah, no, this is crazy because like trillions of dollars sitting idle for a weekend, which is 2 days, and like if you have APR 5%, that's like millions of dollars lost just like that, because the capital it's not used and it could have been used. And then in terms of like the crypto market, you can immediately put it into Aave or something and get the yield from it, and or it just use it for other purposes, but just not have it idle. So I feel like the market potential there, it's huge just for it. And there is a fun not a segue, but like a point. They just did a research on like how much money US economy lose on airports being not efficient, and you need to be there 2 hours before. And if you reduce that 2 hours to like a 1 hour or something, like like a train station, you just get there on time. That's a billions of dollars in lost value for American economy. And like this is an hour of a person, but we are now talking days, and that's way bigger than that. So yeah, that's a great to see like that, like we are actually improving, and crypto is finally having this moment of like we are not speculation anymore, we are actually building something which can help those institutions to be more profitable. So is there any examples where if you can share maybe parable that it's like already powering, where like this new fintech it's kind of popping up in US or elsewhere, and like what was the experience so far?
Yeah, great question. I think my favorite example is a company called Celio that has built a fintech app in Africa, and they have looked at this instead of thinking we need to build a smartphone app and get this app in the hands of everyone who has a smartphone. They've looked at it as how can we make this new financial primitive and stable coins available to anyone that has network connectivity and you don't need a smartphone. And they've built a banking service that leverages Para's wallet infrastructure to send stable coins using text messages. So you can send stables uh, right now. It's most of their users are concentrated in a few countries in Africa, but eventually you'll be able to send dollars anywhere in the world using stable coins. And I think that this is not only a huge advantage for emerging countries, but even in the US, where we have people who are underbanked and have limited access to smartphones, internet, and banking services, being able to send and receive money via SMS is a huge breakthrough that I'm really excited about.
Yeah, and like for our listeners, this is actually a very common way of banking in Africa, like sending the money over SMS. Basically, like because the smartphone adoption it's not that high there, so this is great that like Parabol is actually powering this type of system, and basically making unbanked banked, because now you have access to financial services. And like I think what I would like to maybe like move towards is like you recently posted the blog post about stablecoins and fintechs, and one interesting thing what was there was like kind of the collaboration and cooperation between different fintechs and between like different ecosystem players, because as you describe it, it's like in today's fintech world everything gets in silo. If you send money, if I send you money on Venmo, you can receive it only on Venmo. If I send you Zelle, you can receive it only on Zelle. And like we sometimes has this, like I have like three different apps for sending quick payments in the US, and then someone has the fourth one. I'm like, can you onboard to mine, because like I don't want like fourth app to be sending money, which is the same money. Why cannot be the just one app I use whatever app and we just receive the dollars? And like you basically mentioned, like yeah, we are breaking the silos with crypto, because that stable coin can be sent from one wallet to another, and I don't care what wallet provider you are. And like to maybe draw a parallel here for listeners like who might be new to crypto, it's like an email. Like Gmail, I use Gmail as a client, and I can send to Matt an email, and he use Yahoo
iCloud.
because he's iCloud. I thought that he's like a little more old fashioned. So he used iCloud. So he's an Apple user. And even though Apple it's pretty close ecosystem, he can still receive my Google email. And there is no problem with that. And it's because the network it's connected. So, can you elaborate more on that, like how you envision this like to work in the fintech ecosystem?
Absolutely. I think that you bring up a really great point here around interoperability and in traditional finance, pretty almost every system is closed loop, as we would typically refer to it. Where to your point, you can send and receive very easily as long as the person you're interacting with is within the same ecosystem. And we've seen kind of the same problem start to crop up in crypto, where it's really easy for you to take your Solana wallet and interact with another Solana app. It's really easy for you to take your MetaMask and interact with another EVM app, but it's kind of difficult to send and receive funds um, outside of the ecosystem that you're living in. And this is a problem that's very core to Para's mission, and we view ourselves as interoperability maxis, and really encouraging um, Web3 to be seen as an interoperable ecosystem rather than silos where you can only interact with a single ecosystem or even a single app. Um, so at the core, Para is interoperable among any Web3 apps, any fintech apps, anyone that's using the Para wallet infrastructure, so that a user can take the same assets from one app to another app. Um, and then I'll similarly allow users to send and receive funds within the Para wallet ecosystem or outside of the Para wallet ecosystem. Um, and for fintechs, this is a very new idea. This idea of interoperability and wallets that might be able to be used outside of their closed system. At Para, we accommodate both use cases where fintechs or Web3 apps can choose to create wallets that can be used only in that application, and then enable those users to take self custody of that wallet and now full ownership and interoperability throughout all of Web3. So the approach that we take is modular, and let the application, whether it's a fintech app or a crypto app, choose what approach they want to take to enable users to self custody their funds.
Well, this is actually might be challenging for those fintechs like this thing which I love self custody, and that's why I'm in crypto because I want to control my own assets. How good is it for the bank or for the fintech? Because they love to lock their customers in and never let them go. That's kind of like part of the business model. So like, did you receive some feedback from those fintechs, or what you are like kind of showing them as a additional value when they cannot actually lock the customer down, because now I can take my own assets in my self custody wallet and go to the competitor?
Yeah, it's a great question, and I'd say no two fintechs are really thinking about this in the same way. I think that what we are likely to see in the near term is that most fintechs who are going to launch on-chain products will do so in a more custodial manner, similar to how we've seen, like ETFs are very much custodial, and for most exchanges, it's entirely custodial. And I think as we see more fintechs take advantage of crypto rails, they'll also do it in a custodial way. But what we're seeing is that there's interest in how to decentralize over time, which has kind of become a theme in crypto over the last several years as well, where fintechs are interested in starting with infrastructure that gives them full control and in some cases, full custody, but enabling them to see a future where users can take progressive steps towards self custody is of interest to an increasing number of fintechs. And then on like the Web3 side, we see high demand for self custody, where there are a lot of crypto native fintechs that are building with self custody at the core of their mission.
That's cool. And I see that like Coinbase is probably the best example on this. Like Coinbase, centralized exchange went through YC, I think 2017, 18 or something like that. Maybe even before, to be honest. I think 16, but not important. Very centralized at the beginning, and now they are basically pushing everything to be decentralized. Like they launched their own chain. They have the base wallet, which is self custody wallet, and now actually you can trade in Coinbase basically anything every token what it's on the base chain. So basically they are like integrating DeFi into their centralized platform, and I assume eventually everything will become kind of self-custodian, and they will really move from that centralized business model into the decentralized one. So on that note, how parabolic it's actually thinking about it. Like I thought, and maybe my understanding is incorrect, like you are really focused on the self custody, but are you offering also some support to those like fintechs that want to start centralized and then move to the centralized way?
Para wallets are all self-custodial. We are built using multi-party computation as our key management infrastructure. So every account that gets created excuse me, has two key shares. And one of those key shares is stored by Para, and the other key share is typically stored by the user. Um, what we can do for fintechs and crypto companies that want more control over the user experience and more control over transaction signing is enable them to back up the user's share on their servers instead of on the user's device. So this is still self custodial in the sense that no single entity can control the assets or the account for the user, but the fintech or the app doesn't need the user to sign in and authenticate into a session every time they want to sign transactions. So this enables use cases like dollar cost averaging, stop loss orders, um, automated portfolio rebalancing, any sort of transaction where you want to move money without someone being at their computer or their phone tapping a button. And this is where I think most of on-chain finance is moving towards, where in the past, there are a lot of transactions happening on chain, but almost all of them, I would venture to guess, are happening because someone is pressing a button at that point in time. Whereas in the traditional financial services space, most transactions are happening in an automated fashion. And I think this is where we're going to move towards. And the fintechs and the crypto native companies that are going to be responsible for moving this money will need more control over how and when to do it, and we can provide that either in the user directed self custody manner or in the what we refer to as pre-generated wallets where the app is storing the user share.
That's so cool. And like I think this is great because users don't want to like, control where the monies are and how they are earning the yield or what they are investing in. That's why Betterment it's so successful. Just put money there and like in a couple of years you get more money back. That's great. And I don't need to deal with it. Uh and I think Paravolet is also like cooperating with Aave or like integrating Aave for this kind of reasons for yield generation and stuff like that. And the interesting part on the Aave, it's like they just became like 38th largest bank by value locked in the United States, and like they are growing. So like JP Morgans of the world like should be worried that Aave will actually become bigger than them eventually. So on that, how are you thinking about this like a DeFi integration and like for the future of fintech, but also the how Parawallet actually enables that kind of stuff for users which might not be familiar with crypto at all?
Yeah, it's a great question. I love to see the success that Aave is having. I think that they were one of the first examples of a crypto app that really helped me realize the power of blockchain and how easy it is to lend your coins and generate yield, and then how easy it is to borrow against them. And I think lending and borrowing is a core primitive for financial services, and it's really exciting to see Aave's success. Um, and we're excited to be working closely with them towards a vision where our customers can access yield on on the balances in Para wallets by leveraging Aave. And this can unlock not only yield for consumers, but also new revenue streams for businesses, where companies like PayPal and Square with Cash App have benefited from the ability to generate revenue off of consumer balances for a long time while giving none of that revenue back to the consumers. And now fintechs building on crypto rails can access the same revenue by via Aave or another decentralized lending platform, and then make a decision as to how to share that with the consumers or use that for revenue for the business, and really drive new business models that weren't possible at the same scale in the traditional financial services space.
Yeah, no, this is awesome, and like it's really also there is no middleman, so like the yield what is generated usually goes like fully into the user's hand, and another for fintech there can be a business model that they can earn something on top of it as well. So like there are these two ways of doing it, but there is not like other party which actually interacting or needs to integrate because it's very much our open ecosystem. And just for the listeners who might not be familiar with Aave, Aave, how it works is like on one side, you can put some collateral like a Bitcoin and take, USDC if you need to pay something, and you just pay interest on that USDC which you took out, or you provide USDC to the system or any other stable coin, so someone can basically take it from a system, and then that yield basically goes to you. So it's really important to understand how that works. And one more thing for US listeners, it's like, now if you have a Bitcoin, you don't need to first take the USDC from Aave and then go for your mortgage, but you can actually use Bitcoin as a collateral for your mortgage application, because now it's allowed by the regulation, which is great. A lot of Bitcoiners probably now buying houses uh, with uh, with their Bitcoin they bought 2014. So the market is really like expanding, and like now, basically, what I would like love to ask you is like, what's your take on it? Like SEC is going all in on chain. Like they just published like 2 weeks ago, like banking should move on chain in a nutshell. Like before that it was like don't touch blockchain if you are a bank, and now it's like if you are a bank, you better be on chain because that's where we want all of you to be. So what's your take on this like progress, like basically turnaround?
It's being in the US, it's been kind of incredible to watch. It's turned around so quickly, and it's really exciting to see how quickly fintechs, banks, credit unions, mortgage lenders are all shifting in their perspective around crypto. And I think it's absolutely the like pivotal moment for institutional adoption. I think we've been saying for at least the last 6 years that I've been in crypto, the institutions are coming, the institutions are coming. But now they're not only coming, they're launching chains, they're launching stable coins, they're acquiring crypto infrastructure companies. I think the institutions are here.
Yeah, definitely. We were like, talking about institutional money. Now the institutions itself are running on chain or starting running on chain, which is really crazy to think about. Like 2 years ago, we were in like depth on the bear market. Nobody was touching it. Now everyone needs it, and it's great to be here. And like you've been in the space for a while. I've been in the space for a while. We saw many, bear markets happening, and like we still pushing and building. And this is like really where we got, and now we can provide this infrastructure to the enterprises, and they can use it. So I'm happy to be here and see the outcome of our hard work. And now, like, let's switch gears a little bit, because I know you are in Salt Lake City right now. You are at the Mountain DAO co-working space. I love DAOs. We all love DAOs because this is how to DAO space. So tell us more about the Mountain DAO and what they are doing there and what you are doing there.
Absolutely. This is version 8 of Mountain DAO. They do it twice a year here in Salt Lake City for a month at a time. So for the month of August, we're here, and for the month of February, we'll be back. It started 4 years ago with just a couple of builders in the Solana ecosystem, based in Salt Lake City, hacking some projects together, and inviting their friends to come build with them. And now, in the eighth iteration, it's grown to be, I think, one of the biggest co-working communities in crypto in the world. It's very informal. It's a co-working space where anyone is welcome to come and network, or put your headphones on and sit at a desk with a monitor and a chair and crank. Um, Usually people are here from 8 a.m. to 3 a.m. during the week, working on probably 20 different projects represented here just today. Um, and then on the weekends, we get out and have some fun. This weekend, there's a group going out on the lake to do some water skiing and wake surfing. There's a group going ATVing in the mountains. And if you come in February, we've got the best skiing in the world.
Yeah, I know. I never been actually, but like I heard a lot from my wife, who is native uh, to
Or you should
Utah, that
come for V9 in February.
yeah, definitely. Considering coming for V9, it sounds great, and like I would love to like go skiing and work on like different DAOs innovation and crypto innovations there, and Solana ecosystem, Ethereum ecosystem, we both pushing the boundaries, and like it's great to see that like people are working together on something very useful, but then having fun together as well. So thank you for that. And Matt, like I would like to give space a little bit to you as well, because I ask many questions, but is there something I did not ask and you would still like to touch up on?
I think one thing that I would be remiss if I didn't bring up in a fintech podcast is compliance. Um, there's a lot of conversation right now around KYC and AML and transaction monitoring. Um, and I think that we've reached the point in crypto's maturity cycle where it's time that we embrace these uh, the, these new primitives, as a part of the roadmap that is necessary in order to scale. I think that there's a lot of really exciting things happening in like the zk-TLS space around KYC, and this ability to create like a decentralized network of identity, where we can ideally get away from this paradigm where every new app we share our ID and our social security number and our driver's license information, um, because things like what happened with Coinbase can happen. I'm really excited about the innovation in the KYC AML space. That's kind of where I started my career in risk and regulatory data, um, and continuing to be excited about the innovation and the teams that are pushing the space forward.
Yeah, definitely it's important to be compliant because we want to, uh, do what the big guys are doing and like, really be part of the financial market, or honestly like recreate the financial market, but we also need to be compliant. And I understand why you are coming with these questions, because you've been AML consultant and you did compliance at the JP Morgan, so you know a lot about it and you know that it's important. And from my perspective as a product manager, I'm like, you should know your client regardless if it's a compliant matter or not. Like you should know who you are interacting with and serving. So thank you for that note there. And there is many projects, some from like Cello ecosystem, some from others, which are working on great ZK tech, which, as you said, like you don't need to reveal your full identity, you just need to confirm. who you are, or share the right thing. And now the ZK and and all the infrastructure is way more accessible and way more easier to use. So this is great. Well, Matt, like this was a blast. Thank you for all the insight of the next generation of fintech. I'm really excited to start using my first app, which is actually will work with everyone in the world, not even. And that's another thing, we are talking now global. Like Venmo, it's US only. Like now with the new generation of fintech, if I have this app, I can send money to my parents in Czech Republic, to my friend in Asia. There is no limitation to it. And like that's a totally new paradigm. And we didn't touch upon, the cross-border payments too much today, but like that's like what is changing. There is no cross border. There is no borders anymore.
Right.
So thank you, Matt, again for the discussion, and good luck at the mountain Dow lake. What was the sport you were doing?
Wake surfing.
Wake surfing, and send us some video to confirm, to prove that you have done it.
All right. Sounds good. Funkar, thanks so much for having me. This was fun.